Introduction to Financial Modeling. Welcome to what should be your first course in creating financial models. Now, when we use the term models, we refer to many things. We refer to mental models, visual models, physical models, and mathematical models. And mathematical models can include anything from algebra and calculus, which generally are mathematical models of actual things, to spreadsheets, which extend the idea of creating a mathematical model. At its heart, what modeling is creating a simplified version of reality. And then what generally happens is that users take that simplified version and they work with it to explore some aspect of the world. Both things are considered to be modeling, both creating the model and working with the model to better understand the world. Any discussion of financial modeling should ask the question, why do we study modeling? And the reasons are fairly simple. One, models help to generate insight, which leads to better decisions. The things that modeling helps us to tease out of the facts are things that are probably not that easy to see by just looking at the facts directly. Models also help us to improve our thinking skills by breaking down our problems into components, which is something we're going to need to do to build good models. It helps us to better rationalize and understand the pieces of our problem. And it also helps us to make our assumptions explicit. In order to create the equations that are needed to build our model, we're going to have to make certain assumptions. And whereas when we think about the model in just an abstract sense, we know we're making assumptions, but we may not know exactly what those assumptions are. Through the course of creating a model in a spreadsheet, we have to explicitly state what our assumptions are. And modeling improves our quantitative skills, our ability to make ballpark estimates, our number sense, our ability to have sensitivity analysis to figure out exactly how much of an effect certain inputs have on the output. All of that is improved through working through models. And finally, modeling is widely used by most business analysts, whether we're talking about finance, marketing, operations. Almost any time that you have analysts looking at a business problem, you have something that can be improved through the use of modeling. When we look at the types of models used in business, we're looking at four basic types of models. There's the one-time use model, which is usually built by the decision maker, which will be the primary focus of this class. You have decision support models, which are models that are constantly updated with data and are used to support decisions that are need to be made by primary decision makers. Embedded models, which are models where a computer makes a decision without the user being explicitly aware. And finally, models used in business education. What are the benefits of modeling, you may ask? Modeling allows us to make inexpensive errors. Through the use of models, we can sit here and test what-if assumptions that might cost us thousands or millions or even billions of dollars to test in the real world. It allows us to explore the impossible. It allows us to set up scenarios that might never happen, or it would be catastrophic as they did happen, to actually see what the impact would be. It improves our business intuition. Through playing with the model, we get a better sense of how our business is affected by changes in circumstance. And it allows us to better hone our ability to detect when changes in circumstance will be important to us. It helps us provide in timely information rather than waiting to the end of the quarter or the end of the year to see that this 10% drop in marketing costs and marketing expenditures has how it has affected sales. We can tell as it's happening, as it's working its way through the business, that something is going on. And it helps us to reduce costs. Again, because it allows us to try things out without actually trying things out, modeling saves a lot of money. Now, the reason why spreadsheets are so widely used in modeling is that everybody else does it. It's become the principal vehicle for modeling in business. And it keeps the mathematics at an accessible level. Sometimes the equations involved, if they were just written out on one line, would be something that only a senior mathematician would be able to understand. But broken up cell by cell, it makes it far more accessible to the average business analyst. They correspond nicely to the accounting statements Often your models will have embedded within them balance sheets, income statements, statement of cash flows, and the equations for general business metrics like return on assets, return on investment, and things of that nature, which makes it really nice that you can pick those things out, that things are that most business analysts and business people are familiar with, and it's just become the Swiss Army knife of business analysts. Prior to the 1980s, modeling was performed only by specialists using demanding software on expensive hardware. Generally, models were programs that were written from scratch by specialists who were programmers and mathematicians and trained in business, and very few other people understood them. With the advent of spreadsheets, namely VisiCalc and later Lotus 123, this was all changed. And by the 1990s, spreadsheets were the way generally that business modeling was done. And for the most part, the second best way to do most kinds of analysis is through the use of a spreadsheet. There are specialized tools such as SPSS and SAS and Mathematica, which are excellent for doing specialized types of analysis. But generally speaking, the spreadsheet is at least the second, if not the best, way to do almost any kind of analysis. And because it is that common denominator, that is why it has achieved such wide usage. And these specialized decision tools still exist, simulation software, optimization software, etc. But spreadsheets are still the best generalized tool for doing it. And because it's the best way to do modeling, any effective modeler should know the limitations of Excel or any other spreadsheet and know when to call in specialists and say, okay, this is something that is beyond the capabilities of my current tool. Now, using spreadsheets is not without its risks. Spreadsheets can contain internal errors, and more errors are introduced as these spreadsheets are used and modified by other people. And if we look at a sampling of actual errors with serious ramifications, some spreadsheets, the sorting works improperly. Other ones, you have a careless naming of the files. There's a copy and paste error. You have an erroneous numerical input into a sheet. Some of the numbers are entered into the spreadsheet as text, and when it comes time to do math on them, that math doesn't occur properly. If a spreadsheet gets copied and pasted, sometimes it can get shifted, so all the numbers appear in the wrong columns. Everything is off by one space, and you can have incorrect references in a spreadsheet formula. And all of these are things that can easily happen. And so all of these are things that you're going to need to learn to look for within your own models. And they're the most common errors that beginning modelers and senior modelers will make in creating a model in a spreadsheet. Now, the reason why these errors are so common is that any sufficiently complicated model is approaching the point of almost being a piece of software of its own. And while traditional computer programming is carried out by trained professionals and has elaborate formalized development methods and established ways of finding bugs, modeling, on the other hand, even when done by corporations, and especially when done by individual people, fails to employ even the most basic design and inspection procedures. And because of this, it's very easy for a bug to become introduced into a model. And once it's introduced, it rarely is found, and it just rolls over time after time. And as people continue to edit the model and use it and modify it, it grows around that error, and new errors are introduced. So it's really important to do what you can to reduce errors in your model. And bugs, as I said, ends up being one of the major problems of using spreadsheets. In-user spreadsheets often have bugs. The users are overconfident about the quality of their spreadsheets, so they rely on them and don't check the outputs for reasonability way less than they should. And because the development process is inefficient, the most productive methods for generating insights are not employed. Now, the math and computing knowledge that's necessary for understanding modeling is basic algebra. You should understand the quadratic equation, what an exponent is, the basic logarithmic functions, simple logic. In order to deal with the if statements or max functions, you need to understand the logic behind them and how it works. Basic probability, you should have had a basic class in statistics or something of that nature, so you understand distributions and sampling, and you should also have a basic familiarity with Excel. This course assumes that you understand entering and formatting text, using functions, the difference between absolute and relative references when you're building equations, and things of that sort. When it comes to modeling, we have 4 basic steps. 1, figuring out what are the decisions, what are the possible choices or actions to take that we're trying to evaluate the impact of. Every case, every problem has a question that it's asking. And generally speaking, it's saying, if this happens, then what? So what is the if this? Is it if I raise my price? Is it if I change my location? Is it if our customers disappear? There's always a decision or an input that you're building the model around. The second thing is the outcomes. What are the consequences of the decision? Are you looking for the impact on profit? If so, then you're probably looking to use the income statement. Are you looking for the impact on the bottom line? Then you're probably looking at the balance sheet. Are you trying to look at what the impact will be on shareholder equity? If so, then you need to base your model looking at that as well. Next, we're going to look at structure. What is the logic that links the elements of the model together? Once you've figured out what your decisions are and what the outcomes are that you're looking for, you need to understand what the structure of your model is going to be. Like I said, if you're looking at profit and loss, you're probably dealing with an income statement of some type. If you're trying to see whether or not you have the cash on hand to handle a project and whether the project's going to pay for itself, then you're probably looking at the statement of cash flows. And finally, we look at the data. We look at the numerical assumptions in the model, the data that the problem that we already have, and the additional assumptions that we might need to make in order to fill the model out. So in the real world, the aspects of the modeling activity that you need to be aware of is 1, figuring out the problem context. It's the situation from which the problem arises. 2, the model structure, which is the actual building of the model. And as you can see, that's only one part of the entire whole of the modeling activity. 3, the modeling realization is when we fit the model to the available data and we calculate results and see how it works for us. 4, the model assessment is when we take the results that we get and we evaluate their correctness, their feasibility, and their acceptability. Does it make sense that when you raise your price by a penny, your profits increase by $100 million? Maybe it does, maybe it doesn't. But that's one of those things you're going to have to measure and test before you can really trust your model. And finally, model implementation. That's when you work with the client to derive value from the model. When they're using the model to make business decisions, when they're using the model to assess business viability, at that point, then we're in the implementation mode of the modeling activity. Now, when we question expert modelers, they frequently switch amongst the 5 aspects of modeling. Now, while the structure, actual model building, occupies about 60% of their time, they frequently switch between the structure and the assessment. They'll make changes to the structure, test how valid they are, and then go back and make other changes. They keep going back and forth. And the model structure was the organizing principle around which all the related activities were arrayed. The structure has to be right or nothing else is going to work. But they still need to take the other steps to make sure that the model is appropriate. Now, when it comes to novice modelers, they have several problems. 1, they focus on just one approach to the problem and devote all of their time to it and don't really look at the alternatives. 2, they generally do not evaluate their performances frequently or critically as expert problem model solvers do. They kind of wait till the end to see, and even if then, to see if the model is doing what it's supposed to do, as opposed to checking it as they complete each part. And finally, they tend to solve a problem using only the information given in the problem. They don't make any assumptions or assume that or figure out that they need new data. And all of those things can be weaknesses when it comes to building a good model. So to recap, as far as the organization of the course is concerned, we're going to look at modeling. We're going to look at modeling and a problem-solving framework. We're going to look at basic and advanced Excel skills, We're going to deal with spreadsheet engineering, how to design, build, test, and perform analysis with the spreadsheet model. And we're going to look at the craft of modeling, effective abstraction, model debugging, and translating models into managerial insights.